TGIF Warriors, which stands for Thank God I Found ForexAnalytix, The Flow Show, and F.A.C.E. Who's with me on that? Bran, you're getting a promotion from Harold to becoming one of my knights at the round table. Okay, so thank you very much. AJ, how are you? Jordan, Michael Bergman. I think there was someone else that was new here. Maybe Jordan, your name looks unfamiliar to me. Welcome to F.A.C.E. if you're new here. Hello, team. Felt like Friday yesterday.
Yeah,
So,
we're doing, hey, Dale, hey, Coach. Hey,
Good
everybody.
morning, Dale.
Hey, guys. So, you know, big day today. Will the money messiah save the hemorrhaging of the market at Jackson Hole? And is Ryan here?
No, he,
Oh, good. Okay. Because I wanted to show him. He asked me yesterday about this squiggly line.
your new indicator, it worked, huh?
Yeah, look at this.
It absolutely worked.
Look at where it held.
Trade market. And,
I can't make that up. That squiggle was made
yeah, exactly.
a few weeks ago.
Trade market and sell it. I mean, really.
All right. Anyway,
That's worth a few $1 billion to someone like, I don't know, Musk or so.
yeah. So is the dollar getting tired yet?
It was tired this morning after you guys bought it like no tomorrow yesterday, and then Asia did a bit of an extra knitted an extra leg to it, but we're around those levels, we're around that break zoning cable, we're around the figure in euro dollar. There's a fair bit of options expiring around here.
Yeah.
Just above that 64 in the Aussie, just above the 59 in the Kiwi. It's all like in the balance, and
yeah. So he could have some major impact. Really, you think about it, he could get the dollar to fade. That would be some relief. If he talks easy.
Yeah.
The metals are running a little bit into it. I think this is not quite a new recovery high. In gold and silver, not quite there. And yen, is it a triple top?
It's hanging around. No, we are actually respecting a bit of a trend line coming from those two prior highs, which is around 146.20, but that's like the short term. It all depends what he's going to say, right?
Yeah.
For the time being, people are managing their books ahead of the meeting. If he just neutral, should see this dollar continue just to grind, in my opinion, higher. But there is a chance that he takes notice of the higher yields, the tighter credit, the tighter liquidity conditions. Also knowing that the U.S. Treasury still needs to fund a lot of dollars. That QT is still running. There is this chance that he says something about it, but.
Hey, Kman, I disagree there. What? Let me ask you something.
What?
If you say he's neutral, define neutral for us. What you view as neutral?
I view as neutral that the same thing that he said on the FOMC, which is that they are in restrictive territory, that he said, and that the economy is resilient. That to me is neutral. Well, yeah, I mean, inflation was sticky, but that is going to be the neutral. The dovish land is when he says something about liquidity conditions, because he can't say about the economy, because the economy is very resilient, and we're expecting even better growth come Q3. So he will have to say something to make the dollar turn around. And I think neutral will be seen as we just continue what we are doing now, and the yields won't come off.
Okay. All right. And let me ask you about this, because I actually think that he is going to cite some of the, weaker data that we've seen. And maybe actually, he can't cite anything about jobs, but if he, talks about, how they've brought inflation down, and we all know that in the next inflation print is going to be higher, but he's made a lot of work on that, and maybe he's seeing, signs that the economy is starting to cool. Would that be enough to trigger a dollar move? I think it would, like a reversal.
Yeah, but that's what I'm saying. That is, if he speaks dovish, then we have the reversal. But my base case is that he does not. Well, that's my opinion. I mean, everybody is entitled to have an opinion. And because I mean, he can't really take those PMIs because the composite is still above 50 as well. I don't know where I mean, he can always say our work is done here, because it's coming lower, but in fact he can't, because the inflation is still running well above 3, right?
Yeah, well, okay, and then let's talk about one other thing then. If he does stay status quo and he doesn't talk, down the market a little bit, what do bonds do? Because bonds are going to break down and yields are going to rip. And that I'm sure he's probably really thinking about that right now, right?
Well, that's what I'm saying. If he says something about the conditions, then the dollar will turn around.
Yeah, but I'm gonna ask you this, because I think he is. Do you think that they are concerned about yields where they're at right now in the market globally? And it's not just, US yields, but he knows he has the potential he could slow them down somewhat, because, the bond market is moving quite aggressively, because this puts the Fed in a bit of a pickle too, right?
Yeah, maybe the 10-year is signaling that, before the meeting, pretty good break off that high. Maybe, I would watch it, no matter what he says, for a potential failing rally here now to sell into.
Well, that's the thing, is I can't, just knowing where the bond market's at, knowing where yields are at, and knowing that there's a lot of the positioning where it's at too. I mean, Powell's no dummy, obviously he knows exactly where, how far the market's moved, how far the bond market's moved specifically. He's got to be really careful with his words today. And I think he's going to be very careful in his speech, because he has the potential to really send the bond market into a tailspin. And that's going to erode confidence in
banks.
Treasury. In what?
He's got to know what's happening with the banks too.
Of course, yeah, and the impact that and the impact that these higher yields are having. He's going to be real careful about what he says, I think, today. So it's going to be, I think it's going to be more interesting. I hear a lot of people that are really downplaying downplaying today, but I actually think it's going to be relatively important, because Kman, I don't think you're alone. And the point I want to make here is I don't think you're alone at all in thinking, hey, he's just going to be status quo. And that's just going to keep the dollar, upside pressure on the dollar. And it's going to, it's going to do whatever it's going to do to the markets, but it's going to keep, yields firmly supplanted, moving higher, and same with the dollar. And I don't know if he wants that to happen.
So what do you think? So what do you think he has to say to cap the yields and to support the bond markets? So what do you think?
I don't know. I don't know, but I think he has to be really, I think he has to say something, and he's good, like every central banker, they're pretty good at creating stability. And Jay Powell's no different. But I don't know.
Yeah, but that's what I've been saying for years, that everybody was like turning or saying that whatever, they are stupid also. I say, no, I think Jay Powell has been an absolute ace at meetings,
Oh,
press conference.
100%.
Ace. No, the thing is, he can
yeah.
say something to stabilize the markets, but is he going to say something to put yields lower? That is the real dovish side. And just by the way, I've been with a lot of people. We've done like some kind of poll, and yeah, we are pretty much divided by status quo and dovish. Nobody, or virtually nobody, said that he was going to be hawkish. So the market is stable, neutral, or dovish. So that's the thing where the market is going into the meeting, I reckon. So we've got a bit of both. But yeah, as you say, and as I've been saying for a long time, he's going to weigh his words very carefully. Is he going to try to stabilize the bond market? Maybe. But I think he's going to be. He said already enough last time, right, over the Fed meeting.
Yeah.
We are in restrictive territory, and the market listened to it for 10 or I don't know how many sessions, and then all of a sudden you've got a few data coming out and saying like, hey, hang on, and then the U.S. Treasury came out with their Q3 bond issuance schedule, and that's where the market went like, hang on a bit, these yields are not going to go down if they have to pay up.
Yeah, I know. Go ahead, Dale.
All right, I was just thinking that, if he really wants the economy to slow down, a lot of the growth is coming from the, upper 10%. And if you wanted to get them to slow their spending, he needs a break in the stock market because they're the ones that own it. Okay, so he needs to take their confidence down a notch. So if he's a hawk, this is his chance when the market's a little bit vulnerable here. If he wants that sell-off that a year ago everyone said he wanted, I remember that was a narrative. Well, the Fed wants to take down the market because the economy is so financialized and it's going to take a lower market for him to achieve his goals. You would think that he might press his advantage with what's happening in the markets and not give the market anything to hang their hat on. That's
a big call today, I reckon. I don't think he can really make that call today. And we all remember the famous words: some pain will have to be taken.
And there really hasn't been
taken, but so far
there hasn't been.
In the equity market, there's not a lot of pain, right?
No, not yet.
Yeah, but that's what we've been saying for months, Blake. Not yet.
Yeah, but right, that goes back to the.
One day that will be right. I don't know.
No, I agree with that, and that goes back to this. That goes back to exactly what we were just saying just a bit ago. I mean, Jay Powell's been, people brag on him a lot, but he's done a masterful job to this point, in really navigating through COVID and what had happened, with balance sheets and just. Globally. So, and with yields now, we are getting a little bit of, we're in a little bit of a scary situation right now, especially with the bond market. I think with the 30-year and the 10-year and, all across the curve really, and what you see with yields, but it's a global issue too. So, now, Kman, you said something in the chat room, which I find really interesting. And I agree with you actually today. Well, I agree with you a lot of days, but I agree with the statement that you made in the chat room regarding the euro dollar. You said, well, not the euro dollar. You said Lagarde has the ability to be more exciting than Jay Powell, and her speech is, by the way, an hour before the stock market closes. Just so you all know, it's like it's late in the day. Explain what you mean by that, and I'll comment because I agree with this.
I mean, the thing with Lagarde is that she had to give in to all the hawks for a long time, and she even took the side to be hawkish. But I've been saying for a while, I said it seems a little unnatural for her as well. But now lately we have been hearing those voices from the more dovish side. She hasn't said anything yet, but I think there is this little chance tonight that she'd be the bigger mover for all things euro, not only euro dollar, but also the euro crosses. If she starts to take the side of those doves again, which I think sooner or later will be the case. I was a bit early in my call on the last ECB meeting as well, but I really start to have that feeling that we are not far from her saying like, all right, this is it. Will she give a hint today? I don't know. The base case is that they both are neutral for me, but there is this little chance that she goes like, right, okay, I'm going to go back a little bit more to the side of Centennial and her what's her little dog, the vice governor called again? And I don't recall his name.
So you think she's gonna she could really swing dovish? I mean, based on the last meeting that we had, or last ECB meeting, she was really she looked very, very downbeat, and her body language said it all.
Yeah, she wasn't feeling comfortable at all.
Nope, not at all. So it's going to be really interesting to watch the euro here, guys. And the reason why I say that is we are on the 200-day moving average. The damn euro moved enough to stop me out of my longs last night. You guys always, and I was telling DK in the chat room, in the ForexAnalytix chat room, you guys get all the good moves, man. All this, totally. I get up in the morning, I'm like, damn, that's wiggled me out of that trade, and then it reversed, like all while I was sleeping. That happened in the euro for me, but I've already nibbled back in, but you can see we're a really key support here, and the euro's got to make a stand, or the dollar's actually got to make a bit of a reversal. The dollar index is and continues to break out to new trend highs, and you can see nice big breakout above the 618, above the channel resistance. We're well above the 200-day moving average, putting in a little bit of a reversal candle, but it's very early in the day. And Dale, this is, we talked about this yesterday, and I said, hey, that's a big reversal candle. It should play out to the downside. And you're like, and if it doesn't, that's a big deal. Well, it didn't.
Yeah, that was in the euro, because the euro had
well,
that.
yeah, but the dollar
opposite.
index is just the opposite of it. It's same thing. So
they got, I played those reversal days in S&Ps, and then you get squeezed, no follow through.
There was
today,
no follow.
There's a little tail on it here, and in the euro, you were showing that wedge. There is some divergence at these levels on euro at new lows. I think it was a shorter term 4-hour look or something, and you could see the divergence. There it is.
A little bit of divergence there. And you're also seeing in the sterling where we it stopped out people below 126. That was a pretty gnarly move too. I mean, you can see it was a big 618. Everybody got stopped out below those lows, and then we've shown a
right
reversal.
back there.
I do want to point out, and I know Ryan's not here. He's probably navigating his trades he's got his family in town. He's probably has a couple beers in his hand right now. But the New Zealand dollar, the Kiwi is holding the 618 retracement, and it has been at 59 cents for a while. And also, if you haven't seen the Aussie is still holding 64 cents, which is the big this is a multi-year triangle support. So
and Aussie has a higher low. This pullback's a higher low compared to Kiwi being so we could be set up for that. You could buy it there and risk the low.
Well, yeah, I mean, I think any of these you can. I'm been looking at the Aussie as a bear flag pattern, but obviously this you kind of got to toss out the window, at least until we get past today. But it is really key support, and that's the thing about these lows, right? It's, hey, if you get long here, you put your stops below the lows. If you get long the Aussie, you put your stops below the lows. I mean, everything's manageable risk wise for these trades. If you even look at the dollar Canadian, we've forged out some highs here, a little bit of a double top. If we start, trading below,
and that divergence is even more glaring.
Yeah,
it didn't have the same juice the dollar did yesterday.
Yeah, and rightfully so. I mean, the dollar Canadian has been, hell on wheels, and it really has kind of been the leader of the dollar pairs over the last couple of weeks. Many of us in the ForexAnalytix community, including Ryan actually squeezed out a little bit more juice than I had.
The company was long from 31.5.
Yeah, I was long from 31.5. I got out right around 35. And Kman, were you long this thing too?
Oh yeah.
Yeah.
I was long
And
at 131.59.
yeah, I think we all were, just like the whole community, and this is
Oh yeah, the whole community.
the whole community was long, and this is definitely my most aggressive trade over the last few weeks, and I got out like a little early, like right around, I think it was when we hit new highs and we were divergent, and I was like, yeah, that's enough for me. But Ryan squeezed out, he squeezed out more. I mean, I don't know, it was a really great trade. But anyway, like I said, it's been kind of the
Advantage of
leader.
being in the community for campaign trades like this that
Mhm.
come around maybe, every quarter or so.
Yeah, I
So,
know. I would say, and this is something we could actually have a long discussion about. I always like to tell people, because I get asked this question quite a bit. It's usually once every month or two where I can really step on the gas for sizing wise. And obviously some markets are different than others, but it's really just once every month or two that I can get a little aggressive, where the setup feels right. Some people will be, obviously it's just the way I trade too. It's not you could be a scalper and be putting on the gas a lot of times throughout the day, I guess. Anyway, but like I said, that's a discussion for later today. Hey, let's take a real quick look around and what's happening with equities. Before we have Jay Powell step into the podium.
Why don't you show NVIDIA? So,
yeah.
Well, anyway, I'm just saying the whole market was looking forward to NVIDIA being the savior for the market. They got what they wanted, and by the close, NVIDIA was lower. So people,
well, we said
buy,
we said it yesterday, or yesterday we said, hey, look out. Whoops, I spelled that incorrectly. Sorry. We're going to gap up 100 above the 161% extension and probably sell off. That's what we said yesterday morning.
What it did.
And it did. Now the S&P, I want to point this out just in case. And Kman,
I'm looking away now.
What's that?
I'm going to look away now, because yesterday
if you're right, and Jay Powell is, let's just say he's status quo.
Exactly.
We could be back at 4,500.
No, if we're status quo and he just kind of follows the same script, stocks might close the day near the support, and we have a big head and shoulder pattern developing here. And Nick in our chat room he identified that early on this week.
I identified that when we were making the spike earlier this week, but nobody watched it because you guys were still in bed.
So what's a target on a breakdown?
On a breakdown on a target like this is quite aggressive. No, I was Nick Grasshopper in the chat room actually on Monday. He was identifying when we were down here, and that's why
40-50.
Yeah, this really big, that's
underneath the breakout of 4,200.
It could be it could be a very big move, and it put us below the 200-day moving average. That's not something that's going to happen overnight. That's something that you think about going into the fall, kind of prepping you for, a move that could take place over the next couple of months, but or next, maybe even month or several weeks. Anyway, just something I think we should be paying attention to just with the S&P here. I think that this is obviously very, very critical support. One of the reasons why it's such critical support, if you guys don't know this, and why you can see it's a big zone that I have it, and I've had it there for weeks. If you watch the week ahead video and stuff, it's the previous 618 retracement. It was a big level for the market. Yeah, it was huge. The breakout point, and I think technically weekly on the weeklies, you got to look at the S&P weeklies. We are forging out a lower high, and so there's a good chance we're in a big consolidation pattern, which could look something like this. We could trade back down to 3,900 over
the bears. The Elliottician bears are saying that we completed 2, and now we're setting up for wave 3 to the downside.
Wave three could be ugly then. That could put us down at like 2,800 or something.
Yeah, that's what they're looking for, about 3,000, 2,900, something like that.
Those are some pretty big and bold calls, but I won't say that. I'll just say that we are definitely forging out a lower high on the weekly charts, and I think that's got to be noticed. And I think, you know, if you're thinking longer term, you know, there's probably a good chance we can be trading back below 4,000 within the next couple of months. You know, and I think really whether a wave 2 really develops it's going to be answered by, you know, the question that we'll obviously find out in the next a couple months, whether the US and the rest of the world, you know, heads into a bit of a recessionary period or not. You know, it's funny to watch the pendulum swing amongst macro analysts. You know, macro was dead for so many years, as you all know. I mean, when there's QE, macro is dead because macro doesn't matter. You know, it doesn't matter what the economy is doing. Stocks are going to go higher no matter what, right? And the economy is going to bounce back no matter what when you have, you know, rates at zero and, you know, constant liquidity. But now macro matters. But it's funny, you listen to the macro people and analysts, they can't get it straight because we are seeing that pendulum swing from, you know, going into a recession to no recession to, you know, and so I think that pendulum will continue to swing, and the arguments will go back and forth as we, you know, probably move around in a big range for the next couple of years. Should be interesting.
That's my
to watch.
indicator.
Right. Oh yeah. Sorry, Dale. I didn't mean
the squiggly line.
Totally.
Selling it for $699.95.
There you
All
go.
right.
Awesome. Yeah. So anyway, I you know, just keep your eye there. But I also want to take a look at the NASDAQ 100. It's obviously a driver here. You can see the head and shoulder also developing in the NASDAQ 100. You know, you got speaking of which, I'm going to show you something else. Here's the Dow, a little bit of a false breakout. We're testing some pretty key support. You can see
Dow's a weakness.
Yeah, the stock market's kind of, you know, it's got this, it's got some weak sisters around. And also, if you look at the Russell 2000,
the Russell, look at the Russell. I mean,
nice double top. Yep.
It really got going to the downside. It's been sideways for a year. Okay.
A
year.
Yeah. Yeah. And it's bear flagging too. That's a bear flag.
It's in bad. Yeah. And that's because of a lot of regional banks in there. Doesn't help the index. So.
Yeah. I mean, everything's walking a pretty tight rope right now. And I, like I said, to listen to Jay Powell today is going to be really interesting because, you know, it's hard for him, in my opinion, it would be hard for him to, if we see yields start to come down and he's a little bit more dovish, stocks might take notice on that too. I don't know.
They will. You
know, one of the things that we got wrong earlier this week is with the PMIs. You know, I sat here and Kman, I think you agreed with me. I said, hey, you know, if the PMIs come out worse than expected, you know, stocks might rally, but they're gonna eventually turn lower. But man, they just continue to grind higher. And
well, I'd argue we were not completely wrong, because I said this rally in the yesterday, I said this rally in the stock markets is NVIDIA, and I'm not sure it's going to last. So we were not completely wrong on that.
Yeah. Well, you know, I guess we could. Yeah. I guess that's true. But I want to say that you know, Jay Powell's going to have a little bit of a difficult time, because if he is dovish, I'm not sure how stocks are going to respond to that. You know, I think the stock market's extra sensitive to, you know, weakness in economic data, because it knows, and we all know, that if we do, and I say we as in, you know, you could say the US or globally, if we start moving into a recession, if you look at recessionary periods in the markets, I had the chart up here from the Fred website. Oh, here it is. You can go just take a look at all the recessionary periods from 1970 all the way through, you know, through today, and then go look at equity market performance during recessions. It's not pretty, right? You know, generally speaking, stocks are going to sell off. So stocks are very, very sensitive to the Fed chairman being too dovish, because then he's seeing that economic data is starting to really weaken.
Also,
Anyway,
that Russell, Blake, is more indicative of the U.S. domestic economy, where you know with the other averages you have multinational corporations.
Yeah, I call it, you know, on the week ahead video, Dale, for the last few weeks, I've called it the heartbeat of the U.S. equity markets, and it's not Chevy trucks, it's the Russell 2000, right? It is really, it's all of our mid-size U.S. based companies. You're 100% right. So yeah, it's,
so I mean,
you feel free to use it, Dale. It's a heartbeat of America.
Yeah, well,
America.
It needs a pacemaker.
It does. It really does. Hey, I know we're going to be wrapping things up. You don't have a guest today, do you, Dale?
No.
Okay, I got a couple other things I want to show you, and then I want to go around to you guys and just, you know, let's talk really quick about some expectations here. Crude oil also nice head and shoulder pattern developing. You know, this is one of those that we should be watching. You know, I can move that over just a little bit. We should just be watching as well, because it's probably going to end up moving with risk. So if stocks break down, watch the S&P, watch the S&P, watch the crude oil market. And I know there's so many crude bulls out there. I understand. I get it. I get it. And I get the reasons why. But, you know, if stocks do come down, I think that's going to weigh on crude. So anyway, Dale, what are you thinking going into today? Is Jay Powell going to move the market? And if so, what are you going to be looking at?
Well, I can't answer that until I hear you and Jim Welsh today on your interview.
Well, too bad we don't do it live, and you won't hear it till tomorrow. So,
oh my God, then I'm lost. I'm lost.
Sorry, buddy.
I'll be found. I think Jay Powell is going to give a little comfort to the market.
You think so? I don't disagree with that.
Yeah,
I don't disagree with that. So how's he gonna give comfort to the market then? Is he gonna say, hey, you know, we've got inflation under control, and you know, we're seeing some weakness,
that we could be coming to an end of we might be coming to an end of Fed tightening.
Well, we already know that, though, right?
Well, but he hasn't said that.
Yeah, I guess the question is, are we going to walk away today feeling that the Fed has reached their terminal rate, and they're not going to raise rates next month?
Here's the headline: Powell throws in the towel.
All right, Powell throws in the towel. Kman, what do you think today? What do you think? I know you said it earlier, but you know, what are you thinking, and what do you think it's going to move? Tell us what you think, and what do you think it's going to move today?
Okay. I think Powell keeps the line, and Lagarde is the risk. That's somewhere where I am at. I think Powell is going to try and keep everything very, very sensible. He's trying. But he's probably now a bit more trying to stabilize markets also, because he already said that they were restrictive. I think he's going to repeat that. I think the dollar will stay relatively bid, even if yields just hold up, not really have to spike, but just hold up. It's going to be all right for the dollar. But to me, later Lagarde is a bit of a wild card, because if she says something, if she starts to get back to the side of her more dovish lot, and I remember the name now. It's De Guindos, her chichi boy.
De Guindos, yes.
And then I think the euro could suffer a little bit on the crosser side as well. But yeah, that's what I would be looking for. Of course, if Powell says something about yields are too high, conditions are too restrictive, conditions are too tight, credit is not doing well, and he's afraid of banks, he can say something about credit and meaning banks, right? Yeah. Then of course the dollar will get a little knock on the head.
And you know what, guys? Let's face it, the market's gone up with yields rising.
Mm-hmm. I was saying
it may not be that bullish, except maybe for days or weeks that they like lower yields, but it may be, well, what's he worried about that he's stopping here? And economic weakness justifies rates coming down, and it may not be bullish for stocks. Okay.
Yeah.
Yeah.
Everyone's thinking it's going to be bullish for stocks. It may not be.
Yeah, and that's the point I was trying to make, Dale, is like, he's got to be real careful here because, economic weakness and rates coming down, because that would be the instant reaction, right? Rates coming down, and then next thing you know,
Buy
stocks are coming down
everything,
because
but wait, maybe,
If he,
yeah, right.
if he brings rates down this afternoon, Yellen can say thank you. Huh?
Yeah, we'll see.
She's doing mushrooms in China. She went back. Someone sent me a picture of her taking mushrooms.
Oh, come on. That's totally AI driven and it's fake news. And geez, Louise, Dale, you can't believe everything that you see.
It was Ben Maldonado. So I mean, I had to, Ben, if you're here, they're saying it wasn't real.
The only real thing that we had over the past 24 hours was Trump's mugshot.
Oh my God.
That
it is so embarrassing.
I don't know which one is real and which one wasn't. I've seen a few and I'm like,
he posted himself, right?
Yeah.
He posted it himself.
I don't even know.
He looked angry.
The thing is it's not a great day for America. Let's just put it that way.
Even if you don't like them.
If you like them or you don't like them, it's just not a good day for America.
It's embarrassing.
I'm a patriot. I fought for the United States. I'm a combat veteran.
And you're ashamed of what's happening.
And that's not.
Yeah, I know what you mean.
That's something that I don't look at that and go, yeah, I don't.
Yeah, me either.
I don't. Sorry, just anyway. Dollar CAD, this is going to be on the radar today. Resistance at 136, trend line supports right here. Now, double top actually starts to play out below 135 or 134.90. Okay. But as I always tell the ForexAnalytix community, and I know some of you guys, or a lot of you guys aren't in the ForexAnalytix community, but I'm going to tell you what I tell everybody there. It's us before them. I don't care if everybody's on the same side of the market. I really don't. And a lot of people end up being. But if I can be in before you, then that's all that matters to me. So, and that's what I tell the ForexAnalytix community. It's us before them. So when you look at a move like this and you go, okay, that's a double top. This is where the neckline's at, right? And the breakdown point would actually lead us back to 134 or 130, 133.90, 134.
Yeah.
Everybody's going to start getting short below 134.90. But I want you guys to be watching it right here at 135.20. Because if you get short at 135.20, you add at 134.90, you got a double position moving lower as everybody else is rushing to get in, and you start covering as they are rushing to get short. That's called us before them. And that's just a little trading tactic that those are things that we do in the ForexAnalytix community when we talk on the week ahead or on the daily roundup and the morning edge, because like I said, we're all a lot of us in the market end up getting in the same trades. But if I bought it before you and you're buying it and pushing it higher, and then somebody else, institution Joe or Jane, is pushing it in that direction as well, and then we're selling it to them, that's what it's all about. That's what trading's about. So anyway,
you just gave the definition of Goldman Sachs.
Well, hey, it's good to be the squid.
Define what Goldman Sachs is doing. They buy something and then they go sell it to their clients. So.
Well, it's just we're not big enough to move the market, but when you're using technical analysis, if you're using it in the right way, because if you use it traditional, that's fine, but there's tips that you can navigate around that to understand and see it when it's happening before it happens, and that's one of those tricks that I just showed you. So. Hopefully you guys
comes with thousands of hours of screen watching, and you can't
for years.
Thousands and thousands of hours, and you can't learn that without going through it, but you can learn from someone who has gone through it. So therefore,
That's right. Hey guys, today, and as I said this on the week ahead video, today is the day that that I will begrudgingly be listening to CNBC, listening to all the Fed speakers. I'll put it on Bloomberg, you know, be navigating through the channels, hearing what these yahoos have to say. I usually do not. And you know, I try not to keep it running all day long because it's bad for my health to hear people on CNBC all day. But today is one of those days where you're going to have a lot of media tents set up everywhere. You have like off the cuff type of interviews that are happening, you know, from very, very important people in the markets, way more important, you know, way more frequency than you get in anywhere else. So be on the lookout for headlines and lack of liquidity. So with that being said, I want to say everybody have a great weekend and good luck today. I'll see everybody else on the F.A.C.E or on the Morning Edge here in about 30 minutes. But Kman, you have any last minute words for everybody?
Stay safe. Don't do anything stupid. Don't overtrade. Don't take the trade before it's there.
Very good.
Nothing wrong
Dale?
with doing nothing wrong with doing nothing and let the dust settle and take advantage of it after the fact. Don't try and game this. That's my view. And the sun has risen here, Blake. It's a new day. It's been a great week. I think that we've added value all through the week, like we do for the last 6-7 years. And get some rest, everyone, over the weekend because it's not going to slow down. And now we're only about a week away from all the big money coming back from the Hamptons. So
Woo-hoo!
Get ready. Yeah, get ready and join.
So it's just
And
not going
so-
to be me, Dale, Kman, and Steve and Ryan trading amongst each other anymore.
Yeah, we'll be front running each other all week. Join us. see you in the room. And thanks. Thank you, Kman.
Thanks, guys.
Thanks,
And
Kay.
Blake, I hope your sons are doing better.
They are.
and-
Thank you, Dale.
Awesome.
All right, and have a great weekend, team, and to everyone out there that hangs out with us. May pips chase you down and overtake you during the month of September, which is only a week away. Get ready for a very interesting fall. And don't just count your pips, count your blessings, and have a great weekend. See you guys.
Cheers, everybody.
All right. Adios. L'chaim.